All right, so we are back, and this is the episode two. I was about to say day two, but we already skipped the day two. So this is episode two of the 1 to 10K challenge. The first week was kind of rough. I was just trying some new things with my trading, but ended up break even. So we went down into the drawdown by about almost $200, and today we made $200 back. So we're essentially at break even, slightly above the profit. Yeah, that's where we are over there. And on the funded accounts, yesterday was a little bit disastrous. These are all the funded accounts that I have. So between missed execution and between some technical difficulties, I ended up losing some trades, and I also made a lot of mistakes yesterday, which got me kind of pissed off. Which is usually a good thing. Usually when I'm angry, the next day I do good because I usually go into this coaching mode and I record myself with a voice memo of everything that I did wrong or any mistakes that I made, and I remind myself to self-correct in those positions. So yesterday was a really bad day. I lost almost all my trades on all the accounts, and today was the opposite. I took 8 trades across 5 accounts. One of them was funded, made around 4,500 roughly. So we ended the week green. So we are green on the live account, we're green on the funded accounts and evaluation accounts. And let me get into the trades. So today's trade, it was a CPI. The yellow marker is a CPI. The yellow marker is a CPI, and that was my target. But before we hit that target, I knew we were gonna go hit some sort of drawn liquidity towards the downside before we go hit the upside. Because as soon as I saw this humongous 200 tick move to the downside, when we pull back, I got in right away. Put my stop loss there, and then I was aiming for this area, 830. Yeah. So yeah, I was aiming for this area, which was my data low and data high. I like to put them on the uh, on the yellow color, so you can see. Here we go. Let me just remove the background color. Here we go. So now you can see it better. So yeah, I got in here and I got out at the perfect time, somewhere around here. And on the way back, I had this level. This is the this is our strategy, which is the candle continuation theory. Just a quick run through it. So if you have something like this, so if the price comes down to this area and we start going back up, that's when I buy and I target the high, either as some sort of data high or previous high or previous day high, something like that. So that's the strategy. CCT, candle continuation theory. And these are based on hourly level. So this is my current POI for the hourly. Came to this area. I don't know why, but for whatever reason I didn't take it. Oh, I know why I didn't take it. I didn't take it because it was at the end of the 15-minute cycle. So I've been adding this rule recently that's been saving me taking a lot of bad trades, which is the end of 15-minute cycle. So if a 15-minute cycle is about to end and the setup is good, I usually don't take it. But in this case, I should have taken it because it was at a very strong POI section. So I made a couple of rule change for myself. I'm gonna tell you that, see if it helps you. So if you're at a very strong POI that we had multiple reaction previously, then the 15-minute cycles gets, what's the word, like overseeds, precedes, yeah. So if we have a reaction of a certain level that's very strong level of liquidity, then that level supersedes my 15-minute cycle. I usually wait for the 15-minute cycle to end before I get into the next trade, But what I've noticed lately with the algorithm and the market, I've noticed it doesn't really respect the new beginning of the 50-minute cycle. So I made those rule change. So now if I see a setup and it's at the end of the 50-minute cycle, as long as it's previous day high, previous day low, and we have a strong drawn liquidity as such as data high, data low, or new week opening gap, or new day opening gap, then in those cases, I do not pay attention, especially in this type of formation, which what I like to call it like a morning star formation. We got a morning star formation going up, and later on we got an evening star going down as soon as we took out that data high. And data high and data lows are pretty much the top of the news candle wick and the bottom of the news candle wick. And those are the strong areas that the price reacts based off. That's simply that. But I just waited for the price. I was patient. As soon as the price gave me a nice little pullback, and this time I waited for the new 50-minute cycle, which when it began, it gave me a 2 consecutive green candle, and it was also above this 20 level on the stochastic. So I took this trade and I aimed for top of this, I believe. From here to here, I took this trade on 2 evaluation. This one was another evaluation account that I took. This one I took it on 2 of the other ones. And as soon as I took this trade, I just took a break. By the time I came back, I saw the price around here. I was like, I don't want to chase this setup. Even though I was waiting for this setup almost all morning, I wanted the price to come, take out the data high, and go the other way. But for whatever reason, I missed it. This one, if I would have taken this one on the live account, it would have made me around between $400 to $600. Missed it, no big deal. And I wanted to take a uptrend trade as soon as we take out some sort of liquidity. So, and that's exactly what happened. We took out this liquidity, and at the beginning of the new 50-minute cycle, we had a strong displacement without taking the new low. So I got in right around here, put my stop loss around there. And for my take profit on this one, I knew we were going to have some sort of reaction towards the downside. So this was a counter trend trade. So when it's a counter trend trade, I usually aim for between 100 to 200 ticks maximum. And the way I decide my take profit is based on previous wick points, previous swing lows or previous swing highs, whether if you're longing or shorting. So in this case, I'm longing, so I'm looking for a previous swings. If I see a multiple level, like for example, this swing, this swing, this swing, this swing. So these swings would be the area that I'll be interested in. I usually pick the most highest one, which in this case I pick this swing, and it was perfect. Price came, took me out of my profit, and start going the other way. So at this time I'm done with my with trading all the evaluation account. I already made the money that I need to make on the evaluation account. Now I just have to do something about the funded accounts. So the funded accounts, I took this one trade. Same rules applies. New 50-minute cycle. We're going towards downside. I only targeted like only 100 ticks on this one. Quick trade, made like $500 on the funded account. And these last 2 trades, they were on the live account, the account that we were doing the challenge from 1 to 10K challenge. I was I can't let that one be. And these are again, it's within the hours that I like to trade with. So I took this one, which as soon as it came to the POI section, rejected, got in here, got out around at 100 tick. I got another opportunity, same setup. I got here, from here, I got a little bit slightly over 100 tick. As soon as I hit this area, I got it. So as you can see, I almost got perfect entries on all these trades today. And that's how we were able to recover the evaluation, the funded accounts, and the challenge account that you are doing. Hopefully that explanation and that thought process was helpful for some of y'all. And if you need to ask me a question, you need help, just come join the community. Link is in the description. And if you have any other question, any comment, leave them down in the comment section. See you guys in the next one. Bye.